have a very special guest, Tim Bratz.
Go and give as much as you possibly can, because it doesn't just come full circle. It comes back full circle times 10.
You get to have dinner with one person for an hour, whoever it is.
I think you got to go with Jesus, right?
Ooh.
Business person. I think I go with Carnegie.
You're bringing.
I feel like he's the most likable of any of the titans of industry from back in the day. I feel like the other guys were just ruthless.
So you're telling me for like about $50,000 out of pocket, I can go buy a 10 to 30 unit apartment building, control it, run it, and other people will invest in it, and then I just have to have the skill set to do this, and then I get to wipe out income taxes for the rest of my life? They're like, this sounds too good to be true. Once I understood the game of money, it opened up my eyes too, and I thought the same thing you did. I said, this can't be possible.
I will never be broke because I know how to make $100,000 a month like clockwork, regardless of what industry I'm in. When I take somebody's money, I take it very seriously, and I'm going to make them whole if I ever lose their money.
All right, everybody, Justin Brennan in here today, and I have a very special guest on the Abundance to Give podcast, and that is Tim Bratz. Did I pronounce that correctly?
That's Bratz, but it's all good, man. I've been called worse.
Okay, so yeah. Tim Bratz. Is that German, or is that what's your background?
Yep, just like the sausage, man.
Yeah, so if you don't know Tim, just look him up. And his background in the commercial real estate industry, all things real estate, and kind of how you came up through it, and having over 3,000 doors now. Do I have that about right?
Yeah, I got up to about 5,000, but I've skimmed back the portfolio a little bit. So we're at about 3,000.
Yeah, and then running a community of investors and everything else out there, having software, which we're going to talk about today. We were chatting about before we even came on here. We're on the property management side, and you know, property managing is a big headache. That Tim's like, don't get me riled up, man. We'll get you started, and you'll have me on here for 4 hours getting over that, which I can attest to. You know, we've hired some of the big dogs in the property management space, and then fired some of the big dogs in the property management space, as I'm sure you have. And then you get into managing it yourself, and like, where is that role of like self-management versus third party and that bridge between them? You know, that's probably a big game, especially the last, like you said, 36 months where the industry's gotten pretty tough and pretty tight, given what's happening with the industry and interest rates and all that. So, but yeah, let me start off with asking a couple more personalized questions, because the whole purpose we started around Abundance to Give, right? The A to G podcast was not so much, hey, what are your tactics? How did you grow 5,000 units and 3,000 units? And that's all great and amazing. But it's really about how has giving and helping others created abundance for you in your life, hence Abundance to Give. Mm-hmm. And so let me lead off with that. I mean, how is helping other people, which you do, created abundance for you?
Yeah, it's one of those things, man, where early on, so first I was just on social media talking about me investing in real estate, documenting the journey, and thinking about all my buddies who were working full-time jobs, making $40,000, $50,000, $60,000 a year, and working all day, and then going drinking and partying and doing all the fun stuff on the weekends, going back to the job, but never creating real wealth. And I started thinking, you know, I'd love to just inspire my buddies, because I know one day I'm going to have an awesome lifestyle where I have a ton of money and a ton of time, and I don't want to be the guy that goes on vacation all by himself, because none of my buddies can afford the vacation and they can't afford the time off. And so I'm like, I need to teach my buddies how to invest in real estate. And I didn't want to like shove it down their throat. So I just started talking about it on social media. And as I'm talking about it and educating people on social media, the follower base started growing, and people started saying, oh, that's pretty cool. How do you do that? And then you start getting these messages of, hey, can I buy deals from you? Can I sell deals to you? Can I invest alongside you? Can we joint venture on things? Or can I pay you to coach me, to teach me how to do these things? And so you start getting all these different messages, and kind of the market tells you where the value that you're giving comes from. And so I kept on doing it, and I started doubling down on the amount of value that I tried to give. And people, you know, early on be like, oh, well, hey, if you're so successful at this, why are you teaching other people how to do it? You're just creating competitors and all that. It's like, no, the more I talk about this stuff, the more deal flow I get. The more I talk about this stuff, the more investors that want to invest with me. The more I talk about it, the more people that want to come out to my coaching or join my mastermind or whatever it looked like. And so it's, you know, the law of sowing and reaping is a very real thing. And I think it falls short though on what actually comes about. Like when you sow seeds, you don't just get what you sow, you get many times more than what you sow. And so like, guess what? In self-interest, go and give as much as you possibly can, because it doesn't just come full circle. It comes back full circle times 10, based on giving. So one, my mom was a teacher, right? My dad was a cop. And so, and had like a side business. So I get the entrepreneurial side from my dad and the work ethic from my dad. And from my mom's side, it's like the giving. She's just a volunteer all the time. She's always educating. She's always helping kids. She's always paying things forward. And that both of those individuals are massive influences on my life. And that's why I love coaching. I love talking about what we're doing. I love educating people. I love seeing their eyes light up. Because, dude, entrepreneurship's a lonely road. And you can only think that, hey, this is what I can do until they borrow belief from me, until they borrow belief, right? And I see their eyes light up saying, oh, like I can do more than what I thought I could do without this guy believing in me. And so like that's really, really fulfilling. And, being able to give back, man, checks 9 out of 10 boxes on my fulfillment list of what I want to do with my life. And it makes a massive impact in other people's lives. Like, I don't know the exact count, but hundreds of people have become millionaires because they've come through or
been around
coaching
you.
Or my mastermind, or like I've helped them scale like from individual deals or a handful of deals that they've done. So it's pretty cool and really rewarding.
No, I was even talking to Shai, which is kind of, it's so cool to have connections through that. And he was bringing up you and your community and even the mastermind. You think you could do 3 or 4 of them a year to some retreats and stuff.
Yeah.
And he's like, Justin, you got to go on Tim's retreat, man. He's like self-promoting this thing for you. Yeah. And it was great. I'm like, well, how do I find out? And I'm like, then I found out, I'm like, I'm going to interview Tim on Wednesday. This is great. So it's perfect.
Yeah. Yeah, it's a great group. It's as badass as everybody is on the investment side of things and business side of things. They're just even better human beings. Like everybody's salt of the earth. Nobody's got this massive ego. They all want to help. And when you create a community like that, it's a powerful like room to be in.
It is. I was chatting with you talked about lighting people's eyes up when they learn about real estate and how to do it correctly. And I was chatting with these gentlemen prior to coming on here to chat with you. And they're like, they own a payment processing company. And they're trying to learn about apartment syndication. And when I kind of went through it and I kind of literally showed them, they're like, wait a minute, I don't understand this. So you're telling me for like about $50,000 out of pocket, I can go buy a 10 to 30 unit apartment building, control it, run it, and other people will invest in it, right? If you're running it correctly and it's financially feasible. And I only have to have 50 grand out of pocket. And then I just have to have the skill set to do this. And then I get to wipe out income taxes for the rest of my life. They're like, this sounds too good to be true. Yeah. And I said, well, okay, let's walk through that. And by the end of it, they're like their eyes lit up. They just couldn't fathom. And I said, guys, it's just because you don't understand the game of money yet. I said, once I understood the game of money, it opened up my eyes too. And I thought the same thing you did. I said, this can't be possible. And I said, well, once you understand the game of money, it is possible. And so I can attest to everything you're saying. I love that. So that's amazing how giving back. And I always try and lead with that because people have stories around it. Did you ever have a role model other than maybe a parent, another role model that helped you in your youth?
Man, so many, right? There's been so many, and there's good ones and bad ones. And I think that's something to understand, right? Like before I really knew how to kind of, I don't want to use judge as the word, but I'm going to use it like judge people. Are they a good person or are they a bad person, right? Do they have good morals or bad morals? Like do they have good intentions or bad intentions? Man, I fell into a couple of like real shady characters that kind of like took me under their wing. And I was like, oh, this is exactly how I don't want to do business. And
I think early on in your
yeah, like there was one guy who's when I first graduated, I moved out to New York City with my brother, and for like 2 or 3 months, I worked in the construction and just kind of drove guys around. And there's this guy who just did shady operate. He closed his company, his LLC, every 2 to 3 years. No. So that way, because he kept on getting sued, and he just wanted to like wipe the LLC away and start a new LLC on the contract. So like, there's that guy. And then I meet this other guy who, during all the short sales and stuff that were going on, like 08, 09, he'd be like, oh yeah, I'll help you, save you from foreclosure and do a loan modification or do a short sale. And he'd get people to sign over their title to their company, to their home to him. And then he would go and try to negotiate either a loan modification or a short sale on it.
But he would have them trade title first?
Yeah, he'd have everybody sign over a deed and title it over to him immediately.
Like a deed in lieu almost.
He wouldn't file it, but he had it for as soon as he could get and then this guy, like most of the time he'd give it a partial effort, right? Like, but really half-hearted. And he would just throw tenants in these houses and collect all the rent and try to drag it out for 9 or 12 or 18 months, collect all the rent, and then just let it go to foreclosure anyways. I was like, oh, well, this is definitely, this guy's going to be in jail one day.
Yeah, that's going to come back to you.
And
That's karma written all over that one, right?
Yeah. So it's just, but you meet certain people and it's hard to say that any one person has it all figured out, right? So you got to go into every relationship and every room saying, hey, there's going to be things that I like, things that I don't like from certain individuals. Let me take the things I like. Maybe this person's a great business person, but their health is a disaster. Maybe this person doesn't have a huge business, but their relationships are amazing and they're a loving father and their time allocation with their spouse is fantastic. And like, so there's certain things that you take and select and pick and choose from different individuals that you meet along the way.
Got it.
And then there's people I never even met, like Jim Rohn, who I've listened to all of his stuff, read all of his books. He's the forefather of a lot of thought leadership and is like the guy who taught Tony Robbins and a lot of
I mean, everybody knows Jim
on stages today.
Even Tony talks about him nonstop. So
Dude, just
incredible.
Brilliant, man. And taking complex stuff, making it super, super simple for people to understand and allowing that to then just like have a simple understanding and outlook on life because of how he could take complex things and make them easy for everybody. And so, yet very profound thoughts, very profound pillars that you can follow in your life. Like countless mentors. I would say probably one of the guys who has made a massive impact on my life outside of anybody with my own last name is Mark Evans, is a great guy. He started out in real estate. He's more of a business guy and marketing guy now, but he's a stud and really has a lot of things figured out from a lifestyle standpoint, amount of time he spends with his family, amount of time, like vacations that he goes on, trips that he goes on, how much he gives back. He's been a big influence in exercising that giving muscle of making big donations to charity, tens of thousands of dollars in a single stroke of the pen. Like literally anything that anybody asks him to donate to, he's good with $500 to $1,000 on everything, man. And that's been a big influence on me. And I've been good friends with him for 11 or 12 years now. And we do a lot of stuff together. We've done tens of millions of dollars of business together. And he's made a big impact on my life.
Where do you think your mind, two questions, and maybe you can answer them together or separately. Where do you think your mindset, like the strength and the resilience of your mindset has come from? Number one. Number two, has there been a period in your life that you didn't know if you were going to make it financially? Like you were running into walls, things were going crazy. And how did you pull yourself
my life or this morning, right? My life or this week, right?
Well, no, because we always joke, right? The life of entrepreneurship, and that goes across the board. But yeah, I'm curious about how you pulled yourself through that and how you do it daily, right? Because we all battle through it. Mm-hmm. Yeah. Talk about the mindset side of it. Where did that develop, the strength? And then how does it get you through a tough moment that you can identify? Hey, I had this moment of window of time. Here's how I came through it.
So great questions, phenomenal questions. I'm on a lot of podcasts, and these are two of my favorite ones I've ever been asked, actually. And I've never been asked them before. So mindset, I would say that I'm a very blue collar kid. I'm from the suburbs of Cleveland, Ohio. My dad was a cop. My mom was a teacher. I don't come from money. And so because of that, and it's kind of Midwest, right? I understand sometimes the California or the New York or the Miamis and stuff, like there's a little, they look at money different than I feel like people in the Midwest look at money sometimes. And my perspective on money growing up, my dad would wear like a shirt with rips in it, and he'd like put his shirt on and his arm would go through the hole in the armpit, and like the actual sleeve would be up here. I'm like, get a new shirt, man. He's like, no, why do I need a new shirt? This one's fine.
That sounds like a frugal man.
It like super frugal, like millionaire next door, right? Had a side business, always had 3 careers or 3 jobs or 3 things going on at once, and saved every single nickel and just never really needed to keep up with the Joneses or anything like that. And so I think a lot of that has been instilled in me, like just seeing my dad just not care really, like very much cares about money, but not caring about what other people think about him, I think has helped a lot in that. I like growing a business. I like money keeps score of how well you can run a business. And at the same time, I don't come from money. So although I like it, I don't need it, right? And it's not my identity either. Where if I lost everything, I'm blessed enough to have my parents together and to have a lot of amazing friends and a lot of amazing people in my life where if I lost everything, I still have some amazing relationships. And there's plenty of people who would give me a couch to sleep on and give my family a roof over our head, give us a warm meal, or give me hey Tim, here's $100,000. I know you're good for it, man. Go back, get after it, right? And you develop those relationships through character, by showing up, by giving and helping other people when they're in those situations. And I mean, there's probably a couple dozen people that I can text and say, hey, everything went to zero. I need $100,000 to get back on my feet, rent a house, and did this. And there's like, I have a lot of amazing, amazing relationships, but that's because I always show up for other people. At least I try to. So I think that's a big, and to know that I have that safety net, to know that I have those relationships, to know that I have confidence in my own ability to be able to go out and make more money again, gives me that much more confidence in being able to not take risks, but to pursue endeavors and opportunities.
So do you think the strength in your mindset came from your dad?
Probably, yes. Part of it, knowing that I can figure some things out, knowing that he has always been like this safety net. And I knew that I could take big risks and lose it all and be able to move back home with my parents if I had to. That definitely gave me the confidence. Then from there, once I started building the skill sets and understanding the knowledge and understanding the how-tos of all this stuff, now I have that own belief in myself, right? I have I will never be broke because I know how to make $100,000 a month like clockwork, regardless of what industry I'm in. Like I can go and figure out how to build $1 million landscaping business tomorrow. I could have it up. I could have a painting company the next day. I can build $1 million business because I have the insights and the ideas and understanding on how to do it. So I think you borrow belief originally, and then once you gain it yourself, you can then compound on your own beliefs. And that's what's given me a lot of confidence in order to go in and push through. The other thing is though.
Yeah. Tell me about a tough moment. Tell me about a financial, we've all had them, right? Whether that's a financial crisis or even of the last few years,
Well, like in December of 22, or summer, fall of 22. I mean, this can go on for a little bit. I'll try to expedite it, but there was a deal that we were buying for $75 million. Not my deal, somebody else's deal. They brought it to me, said, hey man, we'll give you 20% of the overall deal to just sponsor the loan, because I had a big balance sheet at the time. And so I was like, oh, okay. I don't have to bring any money. I don't have to operate it. I don't have to, anything else. Nope. You're just signing on a loan. You got 20% total equity, not just GP. Total equity.
That's amazing.
I'm like, great, man. I can make $6 million on this thing over the course of the next, 5 years. Yeah. It's worth 70. It's going to be worth 100 million. And we're going to be in good shape. And this is easiest $6 million I ever made. Actually hardest by far, because what ended up happening was he brought in somebody else to go raise capital and bring the liquidity. That guy is not a good person. And on top of that, this is in April of 21. So it's a massive deal.
And the interest rates are going through the roof.
And interest rates within 12 months, we got a variable rate loan because it was, we were going to stabilize it and we were going to make some renovations to it and all this stuff. And we were going to renovate it and turn it and stabilize it in 24 months or whatever, and then hold on to it. Well, while you're doing this massive renovation on a 600-unit apartment complex in Texas.
What part of Texas? Dallas or
Houston?
Austin or Houston?
Houston. All of a sudden, Gulf Coast insurance rates skyrocket.
Oh boy.
And then 2022, interest rates start skyrocketing. And we got to a point where we had a rate cap on our loan, but got to a point where there was a capital call by the management company in August of 22.
Got it.
And we're like, what's going on?
Who's the management at this time?
What's that?
Who's the management company?
We're in the middle of a lawsuit.
So okay. So don't say it.
I can't state who they are.
Yeah.
But the management company said, "Hey, we need
we need you to fill the reserve account." Got it.
We need $300,000. No worries. We're not the kind that do capital calls with our investors, and if we raise more money, we actually dilute our own equity instead of our LP's equity.
Oh, interesting.
The way that we structured it, we have far more equity on the front end. We kind of treat them almost like debt lenders, if you will, where it's like it's fixed, but if we miss the mark on the capital raise, we dilute our own equity or we bring the money ourselves. So it was me and the GPs. We just wrote checks for $300,000 total.
Wow.
6 weeks later, they said, oops, it's not $300,000. We actually need $500,000. We're like,
more or total?
Total.
Okay.
So 200 more. But they just gave us financials 6 weeks ago. How did you miss this marks this much in 6 weeks? Right. And we said, all right, well, send us all the financials. We're reviewing everything. Within 30 days thereafter, they said it's actually 1.1 million. Or about maybe it was 60 days, but this was in December of 2022. So it ends up going from $500,000 within 4 months. It's 1.1 or $300,000 to $1.1 million.
So now it's
do not write them a single check.
Game. Now it's mismanaged.
Don't write them a check. our operating partner had to go there. The other guy's like, dude, get ready. We're going to lose all the investor money. Oh, and by the way, last minute, they said, hey, we need like $2.5 million, Tim, that we're shy. Can you raise $2.5 million? So I ended up bringing $2.5 million of equity to the deal and sponsored a loan.
Wow.
And one of the partners didn't have a big balance sheet, wasn't really collectible, right? The other guy probably is collectible, but kind of knows the game.
Yeah.
And we got to a point where, the senior lender, the mezz lender are like, we're coming after you guys. This is just complete negligence on your part. Now that's BS. I don't think they really could have gone through and pierced the
LLCs and all that.
Yeah, what's it called? The non-recourse, not the non-recourse clauses and all that kind of stuff.
Got it.
I don't think they could have pierced the bad boy clauses.
Yeah, got it. Yeah.
Yeah, but they talk like they're going to in order to spook you to then bring more money and all the other stuff. So we fire the management company. We find $3.35 million of aged payables that were never disclosed on the financials. 3.35. Wasn't 300, wasn't 500, wasn't 1.1. It was $3.35 million that we found out. So I moved my team there because the one guy doesn't have a team built out. The other guy is ready to just hand in the keys. So it's me and my executive team moved there. I didn't move there, but my two of my executive team members did go there. I went there, for several days to meet with them and meet with the local team, and the site level team stayed, and we turned around this project. But man, 2023 was hands down the hardest year of my life because of that deal. We had to raise another $15 million that year in order to keep the deal afloat. Right, our rate cap expired.
You basically bought down the debt. So you brought in new debt, right? Get out of the bridge debt, but you had to buy that down.
We couldn't because it was only 30% economically occupied. The property it was abysmal. We had a $75 million loan, and offers were coming in between 20 to 30 million. I'm sorry, $75 million, $20 to $30 million were the offers. And so I was like, we can't sell this thing, right?
Yeah.
Because they will try to come after us for that much. They probably would have stepped in and taken over the loan and all that kind of stuff. But they spooked me, and I already sent in like $2 million of additional capital in order to try to clean some things up over the first like 30 days. And so now I'm into it for $4.5 million. And
you are personally within your partnership, or?
Yeah, between me and my investors, right?
Yeah.
Like my investors, I've lost money on deals. My investors have never lost money on deals. Like I've always either just written a check or figured it out, gave them equity in other deals, or came up with some other solution.
Yeah.
And so, dude, when I take somebody's money, I take it very seriously.
Yeah.
And I'm going to make them whole if I ever lose their money. Because a lot of people, man, listen, I understand they look at the deal, but really they're investing in you and me. And I take that
100%. They are.
Reputationally, man, that carries more weight than anything else. So it was really tough, right? I moved my executive team there. We were able in 6 months to turn around everything. We negotiated discounts on all the AP or put everything on payment plans. Okay. We outfitted the team, got the whole team trained on the site level side of things. We got contractors in there. We had a full audit of all vacant units. All the riffraff got removed. And on all the vacants, we had them light, medium, and heavy. And you focus on the light ones first. And then you get them all leased up.
Get them rent ready, right?
Medium. Yep. Get them rent ready. Lease them up, generate revenue. In business, revenue solves all problems. Yes, so we got the revenue coming in from all the light turns that could be done for the cheapest and the fastest. Then we move on to the medium. Then we move on to the heavy turns, and got to a place. Dude, it took us 24 months to get full cycle on it, and we raised over, I don't even know, $25 million or something that we had to then inject into the deal. Wow. Do some creative stuff. With the previous partners in order to get them out.
Debt on it?
And then we refinanced. It took us 24 months to refinance. So we had the.
Did you get into agency or did you get into something else?
CMBS gave us the highest LTV on it, which is what we needed. We needed the highest LTV possible.
You got the most proceeds.
Yeah.
Got it.
But man, it was brutal. And there were many, many sleepless nights. There were many times where I'm like, I don't know if I'm going to make it through this. I think we can get there. And then, it's a team effort though. Like the team did a phenomenal job. We did find a great management company to come in and help us out. And they're really the only really good third-party management company that we've worked with. And I'm sure there's other ones out there, but turned it around. Yeah. And then refinance it last year. So we refinanced it, I think in February of last year. But then guess what? Then the ICE raids start in Houston a month after we refinanced it, and occupancy goes from 95% down to mid 80s. And we're ahead of most of Houston marketplace.
Yeah.
Right.
Well,
now.
yeah, because Texas is getting hit pretty hard right now, mainly due to the supply issues and all the new construction, as you know, that's been built in different markets. Some areas different. whether it's Dallas, Fort Worth, or Austin, or San Antonio, or Houston.
Yeah.
We own properties in Austin and also San Antonio. But yeah, we've seen a vast majority of the vacancy increase. The data is getting better. The absorption is happening, but it's taking time, right? I mean, at least a lot of the new construction has stopped or is depleted and getting leased up, but it's going to take time to absorb through that to allow vacancies to collapse and constrain. And then hopefully, as interest rates start to improve, you get cap rate compression. Mm-hmm. But yeah, the vacancy, and it's not even the vacancy, it's really the economic loss, right? Because you do physical vacancy, fine, but then you have delinquency problems.
Yep.
Right. And then on top of that, you have concessions you have to give to the marketplace to get people in, right? And then hopefully your maintenance is good, right? At least hopefully you have a good maintenance to where you can keep people and hopefully renew the leases. Yep. And keeping people, they call it the heads and beds game, right? But it is a dogfight in Texas right now. There's no joke with that.
Have you? I don't know what it's like by you, but I know builders have been pencils down in the markets that we own.
Yeah, most all the construction is done. It's stopped.
There's nothing. There's no absorption or there's no new deliveries over the next 3 years. So
correct.
I think we're going to be.
It's good because it's gonna absorb, and the data is all lining up for it. It's starting to turn the corner. So I call 2026 your stabilization year, because you are going to absorb through it. Because what happened to us, at least in San Antonio, which we have a decent number of assets there, a similar story, but not quite as crazy, right? But it's right in line. I had to move out to the property personally and live in the model unit to get the renovation done, simply because the interest rate environment, as you said, we closed escrow, now peak of the market being end of 2021. Mm-hmm. This is a smaller 121 unit deal. Renovation plan's going great. Everything's great up until the interest rates. This was on a bridge product, right? The renovation loan. And then the interest rates started to go. And I'm watching this thing go. We knew they were going up. We weren't stupid, but not 11 times in 9 months. So that changed the whole game. And I'm sitting there talking to our partners going, guys, we're eating through the interest reserve twice as fast as we expected. Mm-hmm. I said, so that means I need to get it done twice as fast. And our renovation crews are telling me they can't do it any faster. And I told them that's BS. I come from the construction industry. I'm a licensed GC. So I ended up moving out into the model unit with the team on the boots on the ground for 3 months. That's great. Getting all the renovations done, turning the units.
Most people wouldn't do that.
Get it leased up to 98%, delinquencies down to 2, get everything in line, get right across the finish line with Fannie Mae debt 7 days before the 10-year treasury went through the roof. And our lenders, our broker lenders with Walker Dunlop, they said, Justin, we have never in our career seen one of our operators move out to the property and live in the units to get it done and get it across the finish line. What in the world are you doing? I said, guys, I have 7 million reasons to do it.
Yep.
7. I'm like, I can't lose the investor money. If we're going to lose it, it's because I did everything I could. I'm going to do everything I can. And if that happens, it happens, right? But I'm not going to not try. So we got it done, got it fixed rate. And that's, like you said, everything's fine. And then the markets start to change. So now we're seeing our tenant base, our good demographic tenant base, it's in the medical district of San Antonio, up against a country club, great location. But now all the rates start coming down in terms of rents because of the supply issue. So our tenant base who couldn't afford the Class A buildings, because we're Class B, well, now they can go afford the Class A's because concessions and rents come down. So they start moving. So then now you have a void felt. So now we start going from our average credit score at 650 to our average credit score of 550. And now you're fighting this game of not only physical occupancy, but now the delinquency game, right? And the renewal game. And then you're just getting hit from 14 angles. And that's what's going on. And it's a dogfight. You know, it's a dogfight.
It's been brutal, man. It's been a tough few years. And there's like, every time you think the arrows are lightening up, it's just like another barrage of them comes in, you know, and there's more stuff. Like in Texas, did you guys pursue any of like the tax exemptions?
Oh, yeah.
Like traveling HFCs and stuff like that?
Not so much that, but we always fight the taxes, right? So you have the tax attorneys and everybody hitting that up every year. And I know that there's other angles too, but we just haven't gone that way because Texas is trying to constrain that.
One of the loopholes in Texas was you could give 0.01% equity in the building to a tax-exempt housing corporation.
Got it.
And they could go around, and now that you're a housing corporation, or the housing corporation is owner of the property, it becomes tax-exempt if it meets certain sort of income requirement.
Got it.
On who you're renting to, and you have 30-day notice instead of a 3-day notice on the tenant evictions and things like that. And And dude, there was this rampage of people trying to get in on that. And
Sure.
we didn't know about it. Our mezz lender actually told us about it.
Right.
And so we pursued it. We spent $1 million in order to put it in place. And we closed the loan in February of 25 on this big Houston deal. And then in April, they froze all applications and said, we're not
Well, they saw everybody
anything.
run into it, right?
Yeah. This is a loophole, and we're going to close it all down and blah, blah, blah. Well, it went to the state appellate court of some sort, and they overrode it, and finally just got a message actually last week that they're going to start processing them again. But it used to be a 99-year tax exemption, meaning zero taxes, and we pay, I think it was roughly around like 15% of what our property taxes are to the housing corporation. So it was like, you save 85% on your property tax bill.
Wow.
And you just pay it to these guys instead. I mean, it was a racket for them and it was a racket for the landlords. But the city or the state saw right through it, put a kibosh on it. And then now they're saying any applications that were in before April of 25 can still process, but they're only good for 25 and 26. And then it goes away. So it's only a 2-year thing now instead of a 99-year thing. So us, that's $2.5 million
for your specific property, that's absolutely worth it. Yeah.
Yeah.
That's crazy.
Yeah. It's very expensive. You need a big property. You need a big property tax bill, right? So
interesting.
It was perfect for us. It would have been a total game changer. And when you think about saving $1 million a year on property taxes,
it's huge.
I mean, at a 6 cap, like that's a $15 million increase in valuation.
Yeah, it's massive.
So
it's massive.
So it would have been awesome, but it'll help us with cash flow for a couple of years, but then it's going away.
Wow. Yeah, there's stories beyond days. I love it. So yeah, let's lead into this property management thing. Got a few minutes left here because you, out of kind of probably frustration, and I'm sure other reasons, you went out and created your own property management software that, as we were chatting before we came on about, it'll outrun, the major players of Resman, Yardi, Appfolio, a lot of these major PM softwares that are all fine and used by some of the biggest players in the game. And you're saying yours kicks ass and takes names. Talk about that.
Yeah. So, you're an operator in the real estate space and you're trying to figure out where are the bottlenecks. Despite what's happened with interest rates, despite what's happened with insurance and labor costs and material costs and taxes being increased and reassessed, what's evaporated more of my net worth over the past 3 years than anything else combined, than all of those other ones combined, is bad property management. Bad property and asset management, specifically by third-party property managers. Now, I'm sure there's good third-party property managers out there. I just haven't come across any of them yet, right? Like there's a couple. There's this really good one in Houston that we utilized, and a couple, but they all talk a big game. Yep. I know there's one specifically. Oh, we charge 6% because we're so much better than everybody else, and they were the second worst one, only after the one who defrauded us straight up. There's a few of them out there that are just garbage and they talk a big game and none of them care about your property the way that you do. So it's like, how do we empower owners to take over management of their own portfolio? Because over the past 3 years, I've done a lot of reflecting of the people that I really look up to in the industry who have amazing businesses, amazing lifestyles, don't get rattled the way that others do. And it's because of 5 points. They buy great properties, typically 20 years old or newer, or they build them themselves. 2 is they buy in great areas, A and B class areas. 3 is they put great debt in place, fixed rate, low fixed, long amortization schedules, and at least a 10-year term on the balloon. They hold it forever. And you know which one I didn't expect? Number 5 is they all in-house property manage.
Really?
Every single one of them. Every one of them do. And so I think about this from that perspective of that's what we need to be doing. At the time, we were only in-house managing like our Cleveland portfolio, which is about 300 doors. Yep. And we were outsourcing 4,000 doors, right? 4,500 doors. And so we sold off a big chunk of properties, about 2,000 doors in our portfolio. And then we've brought in-house 2,100 doors that we now in-house manage over the past few years. There's still a couple in Louisiana and Texas that we use third party on. But here's what happened. One of my biggest investors came to me and he's an engineer and he's like, listen, I want to jump on the calls, the asset management calls, see if we can help expedite processes and bring my expertise. I was like, absolutely, man, hop on. This is back in 2020. And so he hopped on these calls and he quickly calls me up and he's like, hey, you have a CRM and you have workflow management. And then you have another software for property management. And then you have accounting because the accounting in Appfolio doesn't do the accounting on your ownership side of things. And then you have investor management software.
Yeah.
And then you have communication. Then you have like all the other stuff, all the different pieces. And we have like 10 softwares, right? Maybe
Yep.
more, 12. And it's like none of them are communicating. And then there's stuff written on a whiteboard, and then there's stuff in a Google Docs folder, and like nobody has all the information. So all the asset management calls is just getting everybody onto the same page. And he's like, it's unacceptable in my world. And he's like, I want to design a new software that has everything in one location and everything's talking to each other. Real-time reconciled financials, because we will have payment processing with it. Real-time, everything that you need. Economic occupancy. How does nobody calculate? No software.
Well, that's what I've always been blown away by, because, and this goes to show you how PM companies don't get it, because they always talk about the physical, right? The physical vacancy. And I'm like, guys, that's one of three aspects. I said, you're missing concessions, you're missing loss to lease, and you're missing the bad debt. I mean, I know you have it in your financials, but you're not really measuring it. So, and
it's not one singular KPI. And of the bad debt, or of the loss to lease, or of the notices to vacate, all right, so you have this many tenants. How many of them are paying? Of the ones that are paying, how many are under eviction? How many of them are notices to vacate? Of the people that are, of the units that are pre-leased, are they replacing a non-paying tenant, or are they replacing a paying tenant, right? Like there's a lot of different variables in order to develop the algorithm, but like it's totally doable, and we just did it, right? So now we have an actual economic occupancy based on today, 30 days, 60 days, 90 days, built into our software just by putting these simple things and calculating it all together. And so that's one of hundreds of little things that we did to make this seamless and easier to operate. We've
What's the name of it?
All of our, it's called Smart Management. Smartmanagement.com. And it essentially is an all-in-one property management software layered with automations and artificial intelligence. So it does things like, Justin, you live in unit 205 and your HVAC goes out. You send in a work order or a notice into the portal. Right now it's a written, and eventually, like this year, we'll have an actual AI agent that can answer phone calls and stuff. But right now, AI responds via text or email to the tenant and says, oh, I see you're in unit 205. Your furnace is out. It'll look up the make and model of your furnace number, read through the entire user manual in 3 seconds, and then troubleshoot with the tenant on how to fix the issue themselves. Hey, have you tried resetting the breaker? Have you done this? Look at this. And it'll go through it depending on what the maintenance item is. It's not going to have light pilots and do stuff that could create additional liability. But
the quick stuff,
But it'll eliminate probably 20 to 40% of work orders because of just the automate, without talking to a single human. Now, if it can't fix it, it creates a work order and puts it into the queue for the maintenance guy the next day, and prioritizes it in the maintenance guy's task list based on urgency, because of if it's a life safety item, or financial and economic impact to the property. And so it prioritizes these things, and you don't have to hope that a $50,000, $60,000 a year maintenance guy can prioritize it. You don't have to wait for a $50,000, $60,000 a year property manager to prioritize it, or have it fall through the cracks. It's all automatically done seamlessly. And again, those are a couple of
like
very,
you said, there's
very
a million
simple
different things this thing can do.
Yes.
Well, I'm definitely going to be checking it out. Like I can hands down.
I'm telling you, buddy, it's so good. It is so good. It's
now, how does, my next question would be, since it's a newer software and it was engineered by one of your partners and so forth, who is fixing the software and updating the software and fixing bugs and all that stuff that go on the back end? Because I know, just based on my background, my actual partner, he's the Christopher Poley in the Brennan Poley Capital Group. He's a tech guy. He designed software for the U.S. military, the DoD. So I hear the back of this going, dude, managing the blah, blah, blah. So I'm curious about that. How does that work?
Yeah. So this big investor made a lot of money. He worked for Northrop Grumman, the defense contractor, and then he went and was one of the top guys at Rockwell Automation, huge software engineering firm, $45 billion company that does everything for the top Fortune 100. And he left to do this full time. He put up half the money. I put up half the money. I brought the industry expertise with my team and industry influence marketing aspect of things. He brought all the back end stuff, all the idea on how to develop it. And he went to all the different people that he's ever worked with and snagged the top 4 software developers he's ever worked. Like, these guys are world class, and they all work with us exclusively. And then we have a whole team of
so you started a full-on software company, not just a software. Got it.
No, this is a software company. We have property management right now. We have construction management. that will be released late this year or early 2027.
Okay.
We have investor management software that will integrate into all of it to handle syndication.
You're going to compete, because we use Syndication Pro. There's plenty of other ones, Cash Flow, and plenty of other ones out. Invest&x.
And guess what? This is all in one place. It's all packaged in one place. All the financials are packaged in one place. We have our own payment processing.
Are you going to go IPO?
Maybe. I think we'll probably get. I'm sure Appfolio is going to knock on our door. I'm sure Yardi or Real
trying to purchase you guys. Yeah.
I'm sure somebody's going to. But I mean, I know how good it is, and we don't need to sell it. So unless it's a big number.
I mean, if anything, you go the other way around. I mean, but yeah, it's like if you built something so premier, right, where you're pulling clients. I mean, that's what's going to start it, right? When you start pulling clients from Yardi and Resman and Appfolio, and they start digging into it. And they can't move fast enough to improve theirs, right? Because they're too archaic or too slow.
It's just it's big and clunky and old, right? It's just hard to. They have to break their whole system in order to rebuild it,
right?
So they're just not going to.
Right, exactly. Interesting. Yeah, that's wild, man. That's very, very cool. I love that because.
Have you ever moved over from third-party management into I know you guys use Appfolio right now, as did we.
And that's another thing I always joke about. Have you guys ever had to
migrate data over?
It's a nightmare. It's a nightmare, which is once again, it goes to show you the lack of knowledge in the property management space, because I love how these PM companies are like, yeah, so we're going to go ahead and go dark and close the books on the 30th of the month. And I said, no, you're not. I said, we're going to plan this thing out. It's going to take us 60 days. And I said, we're going to do the transition in the middle of the month, you moron. Do you know why you do it in the middle of the month? So that way you can collect most of your rents, and then you have a 2-week head start before you collect rents again. And I said, because I know there's going to be a shit show for about a week between the transition. And you can't tell me there's not. This is not your first rodeo. So don't tell me there's not going to be, because I know there's going to be. And we'll plan this thing out accordingly. So that way we'll deal with the shit show in the middle of the month and not when we're trying to collect rents moving over.
It's so simple, right? And anybody with a reasonable thought train would be like, yeah, absolutely. We do it in the middle of the month because I own a rental property. I know when people pay, and it's the first of the month.
Right. And you can deal with collections and mismanagement issues and things, not all that stuff that goes on in that window.
We just fired a management company up in Illinois, property that we own, 300 units almost. And we had to migrate all the data over from their reports into our Appfolio. This is last year. And literally took 2 people on my team almost an entire week. Well, probably call it 2.5 to 3 days to do all the data. We're talking 50 man hours of data migration. Dude, we built it so that way we can go into Appfolio, go into Entrata, go into any of these guys, download the reports, and upload it directly into Smart Management in 5 minutes or less. And it'll flag anything that looks inconsistent or anything that looks like it doesn't make sense. And so it's so easy to migrate and move over the property management system, because I know that's a big
deal.
That's a lot.
Big deal.
So nobody wants to move because they don't want to deal with that stuff. But we built out programs in order to just migrate all the data over and make it super simple. It's really good, man. I'd love for you to check it out.
Smart Management, I will take a look at it for sure. And we're going to have to do another podcast because I didn't even get into a lot of the detailed kind of personal questions, family. Because I couldn't. You have kids? How many kids you got? Your wife, kids? No kids?
I got 3. Yep, wife and kids. We've been married since 2013, and I have 3 kids: 10, 8, and 3 years old. Okay,
so you're still in the heart of it. I like it.
Yeah,
I have 9 and 11-year-olds. Almost going to be 10 and 12 here pretty soon. But
okay,
so I'm in the heart of it as well. But I want to talk about that relationship stuff and how you and your wife and how that's been built and secured, and how you guys continue on with that, because that's always a big topic for folks. And then the biggest one I want to know, and maybe we finish on this with just a minute or 2 left, you get to have dinner with one person for an hour.
Alive or dead?
They're alive. Well, no, anybody. You get to bring them back to life for 1 hour, whoever it is, and spend 1 hour at dinner with them. Who is it?
I think you got to go with Jesus, right?
Ooh.
I don't think you can go with anybody else.
That's kind of like a no-brainer.
Yeah. If it was let's go with business person. If I went with any business person, I think I'd go with Carnegie.
Okay. Wow.
I think I'd go with Andrew Carnegie.
And then on a
feel
personal
like he's
level,
the nicest. I feel like he's the most likable of any of the titans of industry from back in the day. I feel like the other guys were just ruthless, nasty. And although, John D. Rockefeller's from Cleveland, which is where I'm from, I have this link to Standard Oil.
Yeah.
But it's I feel like he was pretty tough of a guy. And
I just came back from Cleveland with some mentees. We were out there setting up their market there in Cleveland.
Cool.
Woo! it was cold. Holy moly, man. That lake effect, there is no joke on that, Tim.
It's brutal, man.
There's cold, and then there's lake effect cold. When I felt that lake effect cold, I was like, that was to the bone. Like, that's to the core.
It was 0 degrees yesterday. My dad sent me a text message. I was like, man, it's cold here. It was like 45 in Charleston.
Yeah, there's no joke. When you go into Chicago and Cleveland coming off the lake and that wind, oh boy, that is a level of hit your bones that you're like, man.
Yeah, man, it is. It is.
Let's go. Well, cool, man. I really appreciate your time and taking it. And then I do need to get information on your kind of mastermind events you have, because I know you have these few events a year. I'll talk to Shai about it. Because he was hitting me up on it. I said, man, I got to get some info on that, and I'm going to be interviewing you. And so I really appreciate you taking a few minutes, and we'll have to do this again because I have a lot more questions I want to ask you.
For sure, man. For sure. We'll get something else on the books. And connect with me on social media on that side of things. We'll hop on a phone call and chat through whatever that looks like.
So smartassetmanagement.com, right?
Smartmanagement.com.
Smartmanagement.com. Yes, everybody go take a look at that. Property management software. Does it matter what size building?
No, I think it can do single family, it can do multifamily, you can do retail,
but you can go
triple
up to
net
several hundred
worth,
unit
office
type properties, big dogs, small dogs.
We have a short-term rental module that's going to be coming out too. So if you have like some short-term rentals in one of your apartment complexes, or you want to amplify the income by managing a short-term rental and get double the rents, the software is built to just obsess over ways to generate more income and reduce expenses. Right? So it is consistently looking at ways to appeal property taxes, ways to, if you're in a deregulated state, to go to a different, lower cost of energy and electricity, natural gas. It's prompting you on insurance. We have our own master insurance policy that we will invite people onto and save them instantly 10 to 30% on their insurance instantly. And you can sell it. You sell the building with that insurance policy in place, assuming the buyer comes in and uses Smart Management. So now you can get a higher valuation multiple on it too. So like there's so many things I could dive into on what we've done, but it is the number one way to empower beat up landlords on how to improve the property value, asset optimization, or net operating income optimization, and then optimizing the asset value as well. That's what it's all about.
But I'll send it there and we can conversate that way. I really appreciate your time, man. Thank you.
Well, I appreciate you having me. Thank you, Justin.
You bet.